is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia Shanoy. We are missing Anuj on a holiday. No holiday for the bears really. There seems to be a lot of work that's afoot across Wall Street, Europe and Asia. There is a paint of red. It looks like the market is still worrying about probably growth scare and maybe valuations, especially in the FANG stocks, especially on the NASDAQ. But nothing explicit. It appears that's the only rationale you can give. There are some positives as well. The Brexit agreement is probably in the bag now, or at least close to being in the bag. And a China-US trade agreement is also likely before the next set of tariff hikes come in. There should be good news, but the market is just not cheered, and it is looking like October again, as some comments in the United States seem to indicate. Be that as it may, for us, the small silver lining is, although crude is higher than what it was yesterday, it's still around that $65-66 mark. So we may still emerge as outperformers, but it does appear that there's something troubling risk assets. In India itself, the talk is gaining ground for a CRR cut. You know, the RBI is putting in liquidity by buying a lot of bonds, what you call OMO, open market purchases. It could also, replace the OMO with a CRR cut. Be that as it may, I think yesterday's banking outperformance, there are still some legs for interest rate sensitives.
Okay, Lata, morning. A lot of result reactions today as well, right? Last day of the earnings season. But having said that, we did give up a lot of our gains in late trade yesterday. Also in the US markets, the S&P 500 has fallen for 5 days now running. The Dow was down 200 points. And in our own markets, we saw selling from DIIs to the tune of almost 300 odd crores. So yes, there are many pressure pockets. But on the flip side, FIIs bought almost 300 crores as well. And, the movement on crude once again at $66 a barrel. So let's see which way things head. For now, it looks like it's split right down the middle. The SGX Nifty, though, is indicating that the start will be in the green. I mean, it's up almost about 0.3%.
Yeah, it was much better about half an hour back. That's the only regret. Let's hope it's able to start on the green tick and then we'll take it from there.
Yes, the 200-day moving average on the Nifty is at the 10,750 level. It's still some time away from that. So let's see whether that proves to be a bit of a resistance for now or not. But plenty of talking points in trade this morning. So we'll talk about that in greater detail. Let's take a look at what our wise experts have to say as we head into trade today. Rhythm Desai of Morgan Stanley says the bears worry about rates, the balance of payment, a government RBI rift, tepid growth, impending elections and tighter liquidity. He says their counter is that credit growth is at a 5-year high, inflation is benign, the policy response to the liquidity crunch has been significant, oil prices are well off highs, aggregate earnings are in line, domestic flows look solid, valuations look increasingly supportive, though not universally in a buy zone, and sentiment indicators are in a buy zone. Rhythm says India has regained about a quarter of its September underperformance since its bottom relative to the emerging markets on October 9. So clearly quite bullish there.
No, you can take everything that Rhythm is saying, but he himself is hesitant about valuations. Valuations still are not entirely in the comfort zone. So, you can argue whether there is a reason to buy now or reason to buy later, though we have remained in higher valuation zones for a goodish bit of time. Well, let's get your money market views. Mohan Shenoy of Kotak Mahindra Bank says Brent crude has fallen sharply and is likely to settle in a lower range of $60 to $70 per barrel. He says the dollar has been the biggest gainer this calendar year, but year-end profit taking could also cap further rise of the dollar index. He says low crude price is rupee positive, but weak equity markets struggling to find a base could neutralize that positive impact. He expects the USD INR pair to trade in a range of 72.20, 72.50 for the day.
And Mohan Shenoy says falling crude, stable rupee and OMO purchases by the RBI have been bond positive. He expects the 10-year benchmark bond yield to trade in a range of 7.71 to 7.75% for the trading day.
Okay, and with that, let's get Mangalam in for the World View.
Well, declines continue on the Wall Street. So yesterday was the fifth straight day where we saw a cut on the S&P 500. The Dow too lost about 206 points and 1% shaved off the Nasdaq. So the big contributor on the downside on all the frontline indices was Apple, down 3% in yesterday's trading session. Remember that big boy, $1 trillion baby, down about 20% from its record high. What did not do too well as well were the banking stocks, all of them losing in trade after comments came in from the Democrat representative Maxine Waters, who said Trump administration's efforts to curb banking regulations will now come to an end. So the street was spooked by that. Across the Atlantic, the European markets ended closer to the lower end of yesterday's trading range, and that was primarily because of two reasons. One, the previous trading session, they ended at the high point of the day while the US markets shut, and then we had the two big talking points taking place: Brexit as well as the Italian news out there. In Brexit, there was a key breakthrough which has been achieved with the European Union for a divorce, whereas the Italian index was in focus because the Italian government has stuck to the 2.4% fiscal deficit target despite, or rather defying, the EU's call. Across from the European markets to the Asian markets, there is a fair amount of mixed moves coming in on the Asian markets. Two indices in the green for two in the red. The SGX Nifty, that one should come up for you, up about 0.4%, positive start to trade likely. Brent crude prices, remember, they've stabilized a bit below that $66 per barrel mark.
All right, Mangalam, thanks a lot for that. Well, here's a big voice and a CNBC TV18 exclusive. Nimesh and Lata caught up with Christopher Wood, CLSA's global equity strategist. Here's Wood speaking about the peaking out of the emerging market underperformance, the northward trajectory of oil prices, and the underestimation of oil demand from emerging markets.
I just want to add that bit. I mean, he was very, one of the key points he made is that the DM-EM gap, the valuations of DM being very high and that of EM being low, that gap has risen a lot. And therefore, it's time for some money perhaps to look at emerging markets. And on crude, he's not as bearish. So that was the negative. Listen.
In my view, the big underperformance of emerging in Asia relative to world markets, US markets, has peaked out. So I think the fact that the US corrected in October means that this tightening is now hit on all markets. And so I would agree we've seen the worst of the underperformance. But so long as we have US monetary tightening, and we still have it, there's clearly a risk of further downside risk. I just think it's not going to be purely confined to Asia and emerging markets. But a very important point for emerging markets, and particularly Asia, is this US-China trade issue resolved, or does it get worse? We either get a deal before year end, or we don't get a deal, and that will become very negative, because then there'll be a big increase in tariffs. Then I think China will be much less likely to do a deal with the US, and then the risk grows that China gives a signal to its population to stop buying American goods. So that's the risks if we don't get a deal. But my base case is there'll be a US-China trade deal, and the most likely time it's agreed is around the G20 summit, when Mr. Trump's meant to meet the Chinese leader.
Krish, what is your base case on crude now? Because I was reading your report, and you clearly suggested that this crude rally which we saw of late is just temporary, and you'll probably see a pullback from there. And actually, crude has pulled back in the last few days. What's the general base case for crude, and what that means for India as well?
Over oil, what I believe, I think the biggest risk for India right now are external. That is further appreciation in oil and further appreciation in the dollar. So we've had some relief from oil, but in my view, this correction you've seen in oil is primarily attributed to the U-turn you saw from the US on the Iranian oil issue. 2 months ago, the market was assuming the US was going to enforce these measures extremely aggressively, that people who bought Iranian oil were at risk of so-called secondary sanctions. The US did a total U-turn, and as a result, oil has corrected. But that U-turn is now discounted, and in my view, if demand for oil holds up in the emerging market world, which for now it's clearly doing, there's a significant risk that oil trends higher over the next 12 months. So that, to me, is the biggest risk as regards India.
When the OPEC spoke about crude prices earlier this week, they said that they see a scaling down of demand as well. they were scaling down growth both in globally as well as demand from India. So, do you think it goes back to 86, 90?
Who's scaling?
It was OPEC's view.
Well, all I know is that people every year underestimate demand for oil in emerging markets. So the track record suggests that emerging market demand for oil continues to surprise on the upside. India is not so far off in GDP per capita terms the level China was in 2001, 2002, when Chinese demand went materially higher. So I think the long-term risk is that demand for oil continues to grow in the emerging world unless you believe that everybody's going to be driving electric vehicles in the emerging market world. And so far that is more hype than reality.
Okay, so oil demand will continue and that will keep oil prices elevated. That's one of the view coming in from Christopher Wood. Of course, you'll hear this through the course of the day. Global markets are very mixed this morning. A couple of key things took place over the last 24 hours. One, the Fed Reserve Chairman Jerome Powell said he expressed confidence, in fact, in the U.S. economic strength. And he said markets will have to get used to the idea that central banks could raise rates anytime starting 2019. So that was one comment. The other thing is British Prime Minister Theresa May has said that she's obtained enough support for the proposed Brexit deal to move forward. So that's another big development. The pound, in fact, strengthened quite a bit amidst the progress on the Brexit deal. But our research team is here to give you the list of top 10 stocks as we head into trade today. Lots to talk about, so let's welcome them on board. Hi guys, morning. Rima's first up to tell us about Vodafone Idea. Rima.
Hi, good morning. This is the first time the consolidated entity will be reporting numbers. So since the merger got consummated only on 31st of August, the month of September has both the companies, Vodafone and Idea, while July and August is that of Idea standalone. And the numbers are much weaker than what the street was anticipating. Their EBITDA margin has come down to 6% versus 21% for Bharti and 38.8% for Reliance Jio. They've reported a massive loss of 4,900 crore, which includes an exceptional loss of 410 crore. But even if you strip that out, it's much higher than street expectations. Their gross debt is at 1.26 lakh crore, net debt is at 1.1 lakh crore. So all these numbers are extremely weak. The only silver lining is that there is going to be a fund infusion. The total amount is 25,000 crore rupees. That's $3.5 billion. $2.5 billion will come from the promoters, both the Vodafone Group as well as Aditya Birla Group. And the remaining $1 billion, they will look to tap the capital markets. But net, disappointing numbers, much lower than expectations.
Okay. Well, that's perhaps on expected lines in terms of the direction of the results, but the intensity of the trouble perhaps was not what the street expected. Nigel, Grasim numbers?
Well, Lata, Rima said the only positive in the numbers was that fund infusion. That's the only negative for Grasim actually, because the results look very, very good, both on the VSF business as well as on the chemicals business. But, this fund infusion of around 25,000 crores that they're talking about will be a bit of a shock for, Grasim shareholders. One being that Grasim holds around 11.5% stake in Vodafone Idea. So not great news. They'll have to contribute some part of this money. And this was the big fear on the street. And that explains why the stock has fallen nearly 30% from the highs of this year. The holding company discount has widened. And the FPIs, as the FIs, have sold their stake from around 28%. It's now down to around 23%. Deutsche Bank, they are citing this as a bit of an overhang. And they have cut their target price to around 1,250. Remember, Grasim has a net cash of around 1,000 crores. But they have capex of around 7,500 crores. So all in all, not good news for Grasim if they're going to be putting some money into Vodafone Idea. Shareholders will not like it. Numbers, though, were quite good.
Okay, thanks for that. Nigel, Sonia, the M&M numbers came in during market hours, but what would the conference call take place?
Well, the conference call was a bit more cautious, so I expect a bit of red on the stock. And I'll tell you the reasons why. Remember, M&M had guided for a 12 to 14% tractor growth in FY19. Yesterday at the conference call, they said they'll manage to meet only the lower end of that guidance, which is about a 12% growth. Earlier, they were very confident of meeting the upper end, but now they cite a couple of reasons. They've said weaker than expected monsoon and a slight weakness in the festive season, weak Diwali sales, etc., are reasons for the slowdown. Also, they're saying that the change in the axle load norms has resulted in smaller tonnage trucks being bought, because of which the blended margins could also be under a bit of pressure. In fact, some brokerages have scaled down their estimates. Credit Suisse has cut the target price on M&M to 1,030 versus 1,100 earlier. They've cut the EPS estimates by 1% as well. So numbers are not bad. Actually, tractor margins were held at 20% for at least a fifth straight quarter. However, bit of caution on the conference call.
Okay, yeah, actually, I mean, after air conditioners, autos, passenger vehicles, and now coming in to tractors, it's not surprising. There is some demand resistance for high-priced consumer durables. Anisha, you have a bunch of infrastructure numbers, so maybe we'll first take two of them. You tell us which.
Well, let's start with Thermax then, because the numbers came in better than expectation. The revenue growth was up around 38%, and that's a positive. And that was led by the energy segment of the company. The negative, however, was the fact that the margins depleted on a year-on-year basis, and that one was because of the small chemical business of the company. The order inflow, however, was flat. Moving on to Suzlon, wherein more than the numbers, the street will take the cue from the fact that the auditors have raised going concern on the entire company. The company reported a loss of 600 crores. They have withdrawn the guidance for operational performance in FY19, but maintained the debt reduction guidance, but overall a red tick for Suzlon.
Okay, we are coming back to you while you catch your breath. Meanwhile, Ekta, how were the Apollo Hospital numbers? And there's a demerger as well.
Yes, absolutely. But I expect the stock to actually be in the green because the numbers were good, Lata. Q2 revenue was up 15-odd%. The hospital revenue up 11%. Pharmacy business up 12%. The Navi Mumbai hospital has broken even. And there were lower losses in the Apollo Health and Lifestyle business, which is a subsidiary of the company. It runs daycare centers, etc. The company is also going to demerge its pharmacy business. Initially, there was some trepidation in terms of, say, the slump sale, valuation, etc. But overall, the brokerages are positive on the transaction. Plus, they have said that it is going to help reduce debt and it is primarily for regulatory compliance.
Okay. I've lived so long in Navi Mumbai. I come to be very possessive about institutions referred to in Navi Mumbai. It's broken even. That's also a positive, the hospital over there. Okay, Anisha, back to you. Some more infra numbers.
Well, yes, let me start with NBCC, wherein the numbers optically look lower, but if you adjust that, the revenue growth has come in at 36%, which raises optimism on management guidance of 30 to 35% growth in this FY19. However, the consultancy margins have halved to 8% versus 15%, so a niggling worry, but overall a green tick for the stock. PNC Infrastructure, wherein the revenue has almost doubled, but the profit growth was limited due to higher tax. And lastly, on Reliance Infrastructure, well, they have made a provision of 4,200 crores on account of some prudence, but overall the consolidated revenue was flat, and the auditor note on going concern regarding Reliance Naval and Metro business continues. So overall a bit of mixed set of numbers coming in from Reliance Infrastructure.
Okay, thanks for pointing all of that for us, Anisha. Well, some numbers coming in the financial space as well. Abhishek is with us. He'll tell us about Repco Home Finance and Ujjivan and how the numbers looked. Abhishek?
Good morning, Sonia. So to begin on a positive note, Ujjivan has reported a strong quarter after a weak start to FY19 in the previous quarter. So if you look at sequentially, it has been the best growth in terms of customer acquisition or disbursements or the AUM growth over the last 2 years. The AUM growth has been on a YY basis the best in last 7 quarters. The gross NPA has declined to 1.9% and which is the best in last 6 quarters. And the net interest margin, which is at 12%, is the best in 7 quarters. However, on account of the banking operations, a higher OPEX dented the operating profit growth. Coming on to Repco, the poor performance continues on account of Tamil Nadu. The weak disbursal growth at just about 3%. Pressure on yields because the interest income grew by just 2% as against the loan growth of 11%. That drove the net interest margin and spread on the lower side. And first time degrowth is seen both in the net interest income and the PAT level. On the positive side, loan growth remains steady at 11.5%, while gross NPA ratio improved to 3.6 versus 3.96 in the previous quarter. Back to you.
Okay, that was a very passionate thumbs up for Ujjivan from Abhishek. Okay, Sonal, United Breweries and MRPL, an unlikely pair.
Yeah, actually it is an unlikely pair, but like the other refiners, MRPL has also not failed to disappoint us. Well, the core GRMs, they came in at $2.29 per barrel, and that is at a multi-quarter low. It has literally halved on a sequential and on a YOY basis. This could be because of some shutdowns that the company took in the quarter gone by. In terms of forex loss, they have booked a 400 crore worth of forex loss versus 67 crores in the last quarter. Have also made some adjustments of around 25 crores in terms of exceptional income. All this has led to the company reporting a loss of around 81 crores versus a profit of around 362 crores on a sequential basis. Expect a red tick on the stock. United Breweries, on the other hand, reported strong set of numbers. While the revenues were in line with what the poll was suggesting, EBITDA, margins and profits were above expectations. Margins expanded by around 360 basis points. Profits also increased by around 75% Even the balance sheet looks good. They have been able to reduce the debt by 18% in last 6 months. Volume growth also very strong, came in at 17% versus an estimate of around 9 to 10% volume growth. So expect a green tick on United Breweries today.
Okay, it could be one of the stocks of the day actually. More than a 300 basis points bump up in their margins for United Breweries and 17% volume growth. Thanks a lot for that, Sonal. But Mangalam is here. He'll tell us about Coffee Day, Future Retail and VIP. Which was the best of the lot, Mangalam?
In terms of numbers, VIP was definitely the best of the lot, Sonia. But we start with Coffee Day. Coffee Day, the reported numbers were okay. The retail business did fairly well. Reported numbers were, it didn't matter in the face of the sort of announcement that came by. Their average sales per day increased year on year. The same store sales growth came in at 11%, but the big announcement, in principle, approval of restructuring the company's coffee and the non-coffee business. Remember, the coffee business accounts for 50% of their revenues and 40% of the company's EBIT. The non-coffee business has the likes of multimodal logistics, financial services, leasing of commercial office space and hospitality services. Add to that, the company has stake in Mindtree and Sikal Logistics, which is almost 70% of the company's total debt. So the restructuring opportunity is something that the street will give a thumbs up to. Moving on to Future Retail, then the reported numbers were pretty good. The revenue was above estimates. The EBITDA as well as the net profit were absolutely in line with what the street was working with. However, the stock may see a bit of a profit taking, perhaps on account of the fact that no deal was announced. The street was working with that impending deal of Amazon buying stake in the company. The stock in the last hour rallied as well ahead of the numbers, but no deal coming in may take a few of those longs out of the way today, but the results were pretty good. As far as VIP is concerned, spate of good results continues for them. 30% growth on the revenue, 40% growth on the EBITDA, expansion in the margins, and nearly 40% growth on the bottom line as well. Add to that, the stock has corrected 30% from its record high, has been a multi-bagger in the past, but a spate of good results continue for VIP.
Okay, good to hear that. Well, if there are more people buying suitcases, then more people are traveling, Sonia. Anyway, Jet Airways will again take to the wings.
Oh, Jet Airways is up 15% in the last 1 month, perhaps on this news flow. In fact, the latest we understand, if you remember, CNBC TV18 had reported earlier that Naresh Goyal is looking to sell part of his 51% shareholding in Jet in order to raise funds immediately. Our colleague Kritika Saxena had also reported that Jet is likely to merge with Vistara, which is owned by the Tata Group. They own a 51% stake. Now, TOI, the Times of India, has reported this morning that the Tata Sons chairman N. Chandra will present a viability plan on the proposed acquisition of Jet Airways tomorrow. The plan is to have majority control, combine Jet Airways with Vistara. But what's important to see is whether Naresh Goyal gives up his majority, his management control or not, because that is the key bone of contention between the two parties. If this Jet deal goes through, the Tata House will have a combined market share of 24% in the aviation industry with AirAsia, Vistara and Jet. Now, the urgent need of the hour for Jet is fund infusion. Remember, it has an immediate debt and trade payables of over 14,000 crores as of June 2018, and it's sitting on gross debt of over 8,600 odd crores. So perhaps in anticipation of this deal, the stock could move up further.
Move up further, yeah. Just as, there's more certainty towards Tata's putting in money there. I just want to point out two stocks which perhaps we've missed out in the list. Sundaram Finance could get a positive bump up because they've announced to the exchange that they are selling stake in Royal Sundaram, 40% stake. And Kotak Mahindra, I think Nimesh was speaking about it, ING is looking to sell its stake. ING had a stake in Kotak Mahindra because of Kotak Mahindra taking over ING Vaisya. So the report is that they could be looking to sell that stake, and that also could be a little negative for Kotak Mahindra, so positive for Sundaram Finance.
Okay, well, these are the list of stocks. Here's a quick recap then of our top stocks to watch. Stocks with positive news flow, you have Thermax, NBCC, PNC Infra, Apollo Hospitals, Ujjivan, UBL, Coffee Day, VIP and Jet Airways. While stocks with negative news flow, Vodafone Idea, Grasim, M&M, Suzlon, Reliance Infra, Repco Home Finance, MRPL and Future Retail.
All right. Those are some of the stocks that you should keep on your radar. Let's come to the first earnings analysis. PC Jewelers has reported, you can say weak earnings. It's a 38% fall in revenue. EBITDA is down over 25%. Bottom line, the net profit also has fallen 40% from year-ago levels. But then the stock has also fallen in 2018. Sanjeev Bhatia, CFO of PC Jewelers, joins us on the phone line. Mr. Bhatia, good morning. Thank you very much for joining us.
Good morning.
If you can just explain what went so wrong in the second quarter.
The second quarter, the overall sentiments were quite weak. So actually the company has two verticals. In the domestic segment, the sentiments were weak. And also the last quarter, if you remember, was the GST quarter, in which we had grown by nearly 30%. So the base was also quite high. So these two factors did contribute to a quarter-to-quarter decline. But Q3 has started off on a positive note, and we are positive, very confident going forward.
Is it just that? I mean, GST and a big base, it's a fairly seminal fall in profit, you will have to say. And exports have also fallen. There was no GST over there. Why?
No.
It's difficult to make sense of these numbers.
Yeah. So this was domestic. This was domestic. But coming to exports is a different thing altogether. In exports, as we have been saying for long, that the company always had almost 30% of export business, but we now want to degrow this export business. This is a deliberate strategy. And we have also given it in writing that in this FY19 export growth would be lower, or turnover would be lower than the previous year because of the very changing circumstances. Export business is basically credit-related business in which you have to give a long credit to the buyer. This has been the business model since long.
Okay.
But now with the coming ongoing credit squeeze and decline in the funding by the banks, so obviously the company is also changing its business model.
So if you're, Mr. Bhatia, if you're saying you're going to reduce your export business as a percentage of overall business, how much do you plan to bring it down to, say, over the next couple of years?
So I cannot go beyond this year, but to be very frank, as we said, in FY18, we had export of nearly 2,700 crores. And now we want to bring down to 2,000, that is to 2,000 crores. So an overall decline of 700 crores in the export business is expected. But in the case of domestic business, we are still working for a growth.
But in this quarter, the domestic revenues have fallen by almost 16%. So even if you do see a recovery in the second half of the year, what kind of growth would you be looking at?
So we are very confident of a recovery in the second half. Okay. So on a year-to-year basis, we are pretty stable. So we are pretty confident that the second half will pull ahead.
Titan said its jewelry business grew by 28.5%. I mean, you all are selling to the same audience. Why is it that yours is a fall of 16%?
It's very difficult to comment, frankly, on individual company performance. But we actually grew by nearly 15% in the first quarter. The second quarter, and if I remember correctly, the Titan did have growth in the first quarter. So, Titan had growth in the so it's a matter of, I can't really say why, but I can only say for the coming future, yes, the festive season has started off on a good note for us.
Okay.
And in the second half, will manage to pull through in the domestic business.
Okay. Any store expansion plans?
Store expansion plans are going on, but to be very frank, now we are more working on the franchisee store expansion. We have opened 4 stores in this year, and 5th has opened in the 3rd quarter also. And going forward also, we are confident that we should be able to open more stores. But it will be now more of franchisee and not really company-owned stores.
So what is the debt on the books currently, and any plans to reduce the debt over the next, say, 6 to 12 months?
Yeah. So in the we have already in the first 6 months we have already reduced our debt by a cumulative of nearly. When I use the debt, I am using the total banking exposure, which also includes the metal gold loan exposure, by nearly 800 crores. And going forward in the second half also, we are working on to reduce it by almost rupees 500 crores.
Any changes at all in management, promoter stake sale? We had a lot of problems earlier in the year.
Yeah, but that is everything is stable. Promoters continue to hold 58%. There is no change in that.
Okay. All right. Okay, Mr. Bhatia, thank you very much for joining us and hope you have a better second half. Well, it's time we looked at the charts and asked our experts how things might pan out. Good morning, Ashwini, Sudarshan and Mitesh. First you, Ashwini, what could be the trade be today? Yesterday, it was a divergent move between the Nifty and the Nifty Bank. What's the call for today?
Well, good morning, Lata. I think this is one of those phases where it appears that Nifty is outperforming, but I don't think that outperformance is leading to a whole lot. So we made 20-day highs on Bank Nifty yesterday. Now, if we are not able to, show further follow through and, global markets remain soft, then, at best, this outperformance phase will be range bound. 10,450, 10,650, and even if you close above this range, there's a high risk that people get trapped and you don't see further follow through. So that way, a ranging market that remains range for a long time generally tends to lose its gas. So if we have to move up, we should move up, in the next 2 or 3 sessions. Otherwise, I would think the gas of the market, which has kept it higher, made it outperform, etc., could be losing ground. So that way, you are sitting at 200 DMAs of both Nifty and Bank Nifty. So it is a precarious position to be in because repeatedly we gap up and then we don't get follow through.
Okay, well, Sudarshan Sukhani and Mitesh Thakkar also join in. Gentlemen, morning. Sudarshan, do you also believe that there could be a bit of a resistance on the upside, which would be hard to, take out over the next few days?
Well, yes, Sonia, I do. But first, I must compliment Mitesh. For the last 3 days, his Nifty calls have been superb. On Monday, the market broke out and he said, I'm not buying, I'm actually selling and exiting, and the markets fell. Tuesday, he bought at 10,450, and yesterday he said, I'm not buying the breakouts. All 3 days have been superb. So great, Mitesh. Now, for me, those 3 days have been horrible. Okay. So I am not doing anything in the markets. There is a range, 10,650 and 10,450. Now, if the Nifty breaks this range, then I would wait for follow through and then take a trade, which means I won't even buy an intraday breakout. Okay. This is a treacherous market, so for me, this is a no trade zone. If the Nifty manages to cross 10,050, it's just shy of that. I'll still wait for confirmation tomorrow. So just focus on stocks.
Fair point. It has been a treacherous market, yes, almost unguessable. But Mitesh guessed. Very large-hearted of you, Sudarshan, and congratulations, Mitesh. What would you trade? How would you trade the indexes today?
Good morning, Lata, and good morning, Sudarshan. Thank you so much for the lovely compliment. But it's just that a few days it's been getting it tactically right. We do go wrong as well. We all know that. We've been trading for a number of years now. But coming back to the markets, I think it's still in the range of 10,640, 10,450 zones. And I think the next trade could happen once a breakout or a breakdown happens. Till then, I think we'll just chop around. So the idea should be to trade the ranges, which is a very standard way of approaching a ranging market. On the Bank Nifty, I think is where I would keep some kind of close watch upon. That index has marginally done better than the Nifty, and as long as 25,820 is held on, I think there's a good chance that the Bank Nifty could see some kind of rally to about 26,150, 180 zones. So I think the banking stocks individually could also benefit from the Bank Nifty strength, and the top names would be ICICI Bank, Axis Bank, and a couple of PSU names. Having said that, I think broadly, as I said, I think wait for the breakouts or breakdowns to happen on the Nifty. Otherwise, till then, trade on a stock specific basis.
Okay, well, let's do one thing. Let's get some stock specific ideas since you gave us that cue. Sudarshan, what would your list of stocks be for the day?
Well, there are some stocks, mid-cap stocks that's showing bullish signs, and in a choppy market, I think they could do well. Starting with cement as a sector, that entire sector is showing signs of life. But this can all dissipate. If the Nifty starts going down, nothing is going to go up. But with that caveat, ACC is a buying opportunity. Actually, so is Ambuja, so is Shree Cement. In spite of yesterday's decline, there is something going on in cement that seems to be attractive for the bulls. The second is MRF. It had come in my list earlier also. The benefits of that crude decline have already come to tire companies, and they should do much better. So ACC, MRF, and finally, surprisingly, IndusInd Bank. After that big bear market in IndusInd Bank is building a bullish head and shoulder. Now, I don't know whether it will go up or not, but it's certainly worth trying. So I would be a buyer in IndusInd Bank. Two quick short sales, Mindtree, part of that IT pack, which is seeing sustained down moves, and Coal India, where a small rally should fizzle out and it should resume its down move.
Okay, thank you for that, Sudarshan. Ashwini, you too have a mix of buys and sells today.
See, the problem is in a range-bound market, the same sector can have positive and negative stocks. So, for example, in banking, Kotak came off 3.5%, but PSU banks went up. So now, within sectors, things are moving differently. So Kotak is a sell with a stop of 1140, target of 1100. TCS is a sell with a stop of 1895, target of 1840. UPL is a buy with a stop of 755, target of 780. BOB is a buy with a stop of 108, target of 120. And HUL is a buy with a stop of 1700, target of 1750.
Okay, what about Mitesh? What would your stock ideas be for the day?
I have 3 buys to a sell. Apollo Hospital is on my list. I think there's a positive announcement as well, but the chart structure also is very good. So I think that's a buy with a stop at 1149. Look for targets of 1210. Lupin is a sell call. It's a conditional sell. So if it breaks 835, which is a pivot level, go short. Keep a stop at 850. Look for targets of around 805. Marico, I think, and HUL and Marico both did very well yesterday. Marico is showing some continuation signals. So buy with a stop at 342 half. Look for targets of 358, and a buy also on Maruti with a stop below 72.90 for targets close to about 75, 40, 50 on the upside.
Okay. I know Sudarshan has already alluded to treacherous markets which can move both sides. So please take the disclaimers very seriously, which our experts are giving you. They also take intraday positions, and therefore I really want you to pay attention to these disclaimers. They're not put there just by the way because of a SEBI rule. It's something that we would want all our analysts to know, that they will take their positions when they see their stop losses or some other indicators change tack, and you must keep these disclaimers in your mind when you trade.
Okay, well, those are the technical trades. In a bit, we'll get some F&O ideas as well. But in the meantime, let's talk about some corporates. Ashok Leyland delivered weaker than expected Q2 numbers. But the bigger trigger really yesterday was the fact that the MD and CEO Vinod Dasari resigned, citing personal reasons. We spoke to Gopal Mahadevan, the CFO of Ashok Leyland, on a wide variety of issues. Let's listen in to what he had to say about the succession plan and also the company's growth outlook.
In 2021, we have the implementation of BS6, and traditionally, whenever BS6 has been implemented anywhere, I mean Euro 6 or BS6 has been implemented, there is quite a bit of pre-buy that happens in the previous years. We do expect a certain amount of pre-buy to happen in the next year. hopefully if there's a lot of certainty on other fronts, on the microeconomic, political fronts, I would say that the industry should grow at 20 to 30%, but we'll have to wait and watch. But certainly we expect a pre-buy to happen, and that's how we are planning our overall operations. I think the demand growth would primarily be triggered by infrastructure spend. So I think that is continuing, and that's one of the reasons where you're seeing that, other than a slight dip in tractor trailers, almost all other segments of, trucks and commercial vehicles are growing. So if the infrastructure spend were to continue, we would see, a certain amount of growth. But what that number is going to be is very difficult to estimate at this point in time, because we must remember that Q3 and Q4 of last year were very high growth quarters. So what would be the growth rate? Would it outgrow? Would it be flattish? Is something that we'll have to wait and watch. I think, we have our strategies and tasks very clearly cut out, and Mr. Dasari had been working with the senior leadership team and will continue to do so till March 31st. And we also have, Mr. Dheeraj also playing a more active role. We have an extremely capable leadership team, which is pretty broad-based. The decision making is very broad-based. So, the organization is pretty large. So we don't see anything, that is going to hamper the growth or the strategy or the rollout of the strategy. I think all of that is very, very clearly laid out, and we know what we need to do as we go forward.
All right, as promised, we're going to give you some F&O cues now. Vinod Sharma of HDFC Securities joins in. Vinod, hi, good morning. On the Nifty, do you also believe that, it could be a bit of a struggle before that 200-day moving average is taken out? And what would the call be for the day?
I think the call, I would go along with your technical guys. I think it pays to wait for a breakout on either side and then trade. But essentially, I gave you a call in the beginning of the series that this series is going to work out positively, and the second half of the month will be much better than what we have seen. So ultimately, we are saying that this settlement will close Nifty with a flourish, and therefore we continue to be long. We'll utilize any opportunity in the Nifty 30-40 points down to build longs there.
Okay. What about individual stocks?
Individual stocks, there are many. But on the broader side, I'd just like to make one point. While we in the markets have taken note of the fact that the crude has tumbled 24% from the earlier highs, the physiologists in this country have not taken as note as yet. Because this is the two main arguments which the opposition has, because elections are going to impact us. So therefore, this takes out, the lower crude takes out the number one argument of higher crude prices, which is going to impact. So Rajasthan is not so much of a sell-off from a BJP perspective as it has been made out to be. And the Rafale should be out by the end of the month. So I think the 2 points would have gone, could have been rebutted very effectively. So having said that, I think I'm looking at smaller ideas, barring Maruti. I think all my ideas are fairly mid-cap kind of stocks. So Cadila I'm buying at 380 call at 8.5, stop loss at 6 and target of around 14. Maruti is another stock, large cap, which I'm buying essentially for the fact that people who have built positions in the stock have gradually reduced their open interest as the stock has gone up. So people who are caught up have essentially gone out. So fresh longs have not been built to that extent. So this is the early stages of a buying which will happen later on. I'm buying the 7,400 call at 156, stop loss at 100 and target around 250.
Okay, and among others, you've got Tata Power, you've got a whole bunch of stocks.
Yeah,
yes,
it's a variety of stocks. So let me come to Tata Power first. Tata Power is among the stocks that I've seen. It is one which has added 31% open interest in the current series. It has gone up by 12% also in terms of price. So I'm buying the 80 call here at 1.85, stop loss at 1.2, target of around 3. And Nestle, usually whenever I recommend this, it is usually futures. But today we have seen some calls which are liquid. So I'm buying the 10,500 call at 181, stop loss at 120, target around 300. And my last call is UBL, where we have seen 59% open interest being built in the current series with 12% stock being up. I'm buying the 1320 call at 39, stop loss at 30, target around 55.
Okay, thanks a lot
Thank
for
you.
that. Well, I just want to say that nobody has got crude right, nobody has got elections right. So let us be very humble about it, Vinod. No, I mean, I don't want that discussion to go on into elections. We have a lot of time for that. I'm just saying that we can't be sure of anything, especially when it comes to polls and crude prices. Suven Life Sciences?
Yes, in fact, that's the next stock on our radar. The company actually posted a weak set of numbers this quarter. The profits have nearly halved to 18 crores and the margins are down to a little over 27% compared to over 40% in the same quarter last year and 30% in Q1 of FY19. Venkat Jasti, the chairman and CEO, joins us on the phone line for more on that. Venkat, good morning. It's been a really disappointing quarter for you. The CRAM segment, which is the majority of your business, saw the revenues fall significantly. Should we expect more pressure in the second half?
Good morning, Sonia. Yeah, it is a roller coaster ride for us this year, as you could see. If you see quarter on quarter, compared to the first quarter, the revenues are down by 50%, even the profits are down by 50%. But this is an aberration, and which I have mentioned in my earlier call last quarter. In the last quarter, there is 25 crores of pre-shipment has happened from one of the specialty chemicals. That's why the quarter was so good. Also, I mentioned that time that because of the shortages of raw materials, some delays are happening in the raw materials from China. The delays are happening in the shipment. That also happened for us this quarter. But if you see, on a half-year basis, the growth in revenue is at 14%, even though the margins are a little less. But this aberration will even out within 2 to 3 quarters because this is the thing taken care of by everybody. And we hope to achieve the last year's number before the end of the year.
Okay. Yeah, I agree that if you took the first half in general and not just second quarter, you have turned in a 13.5% rise in revenues and an EBITDA growth of 26%. How is this third quarter panning out, especially in terms of the impact from China and the shortages for APIs?
In our case, it is the shortages of the raw materials for our CRAMS project, which is for innovative products. But this will continue, as I was telling you, but it will even out within 2 to 3 quarters. But as of now, the third quarter looks very good, and even the fourth quarter looks very good because whatever the delays that have happened for the shipments that are to take place in the second and third quarter now has come up. But it may happen in the later part because of the shortages. But right now, the next 2 quarters looks very good.
Okay, on the services business particularly, in the first half, you've done a revenue growth of about 20-odd%. Is that something you can replicate in the second half?
Not yet. In the CRAM side, maybe yes. On the services side, it's not that much.
Okay. You said this shortages of raw material from China, there could be a bit of a relief going forward. But in terms of a timeline, when do you think this this delay could sort of be behind you?
I think we don't know. For the next 2 quarters, we don't see any problem. But it can happen for the shipments in the 19-20 time frame, which we will not know at this time.
Okay. Well, can you give us some update on your SUV, SUVN 502? I mean, basically your Alzheimer's drug. What is the stage of development? When can we expect Suven to get the benefit?
Yeah, we have achieved a big milestone on October 23rd. We are supposed to enroll 537 patients, but we did enroll 563 patients as of October 23rd, and we stopped enrolling any more new patients. This means that gives us the last patient out will be May of 23rd of 2019. After that, 2 months of database lock-in, the results will be end of July or August time frame. We'll know the result. If the result is good and we are in the money, and that means we will have a lot of opportunities. As you know, as of now, the safety is very well established. The Drug Safety Monitoring Board, which met 3 times during the clinical trial until now, which has the capacity to stop the trial if something is not good, has unconditionally given the approval to continue the trial. That means safety is very well established. And the only thing is we don't know is until the data is out about the efficacy. So if everything goes well, third quarter of next year will be our monetizing opportunity.
Wow. Okay.
Okay. All right. Well, thank you, Mr. Jasti, for joining us.
That's a very
and giving us your
important
view.
takeaway. If, in the third quarter, they can monetize. Third quarter next year, they can monetize the Alzheimer drug. That is one of the big triggers for Suven.
Oh, and it has been a big performer. I mean, this year in a market that has fallen, it's up almost 30% in the last 12 months. So let's move on from one sector to another. Tech Wabag posted an all-round miss in Q2. The bottom line looks a shade better due to lower tax outgo. The company has also maintained its FY19 guidance. The other positive, though, is that the company has secured a 600 crore rupee order in Tunisia. Rajneesh Chopra, the global head business development of Tech Wabag, joins us now to talk about that. Mr. Rajneesh, thanks so much for joining us. If you can first start by telling us about the order inflow outlook. What kind of order visibility do you have both in the domestic and the international business over the next 12 to 18 months?
Good morning, Sonia. See, as you rightly said, we have recently, got an order of 600 crores. It's a desalination plant to be designed and built in Tunisia. But even if you see over the last 1 month, there has been a consistent order intake and large ticket size order intake. We got almost 1,000 crore order from Marafiq in Saudi Arabia. We were awarded another contract of 555 crores from Qatar. So in recent past, it is around 2,100 crores what we have received from Middle East and Africa. And if you recall, on the same channel I had spoken almost a year back, where we said, our growth areas will be Middle East and Africa in the near term, and probably maybe in the long term, we are looking at Latin America. So that is, going forward strategically from where we find that our growth is going to come. As far as the current year is concerned, I think we gave a very aggressive order intake guidance, and we still maintain that, and we are very much on track for the same.
Okay. Well, glad to see that optimism, sir. But the revenues, I mean, there are problems in the P&L and the balance sheet, especially in the second quarter. Revenues are down, EBITDA is down. We understand that construction companies like these will have lumpy ins and outs. But can you just size up the half year and what is the confidence that the full year will be different?
See, I'll just tell you, Lata, that if you see at H1, we are down by almost compared to last year around by 110 crores or so. I think we are not really too much concerned on that account. That's why we are maintaining our guidance. The reason being that two of our very large projects, one in Malaysia, which is the biggest project ever executed by Wabag, that is almost nearing completion. And the other project was in Bahrain, Amas, that is also more than 99% already completed. And definitely the reason for little less, sales is that there has been a delay in, finalizing of all these large ticket size orders, which are going to further contribute, to the sales. And looking forward, if you see our consolidated, order book, it has strengthened, from 7,900 to 9,200 as on date. And we are pretty confident that before March, it will be further strengthened. So since we have a good order backlog, I don't foresee going forward that we will have any challenges on, achieving the guidance which we have already given.
So the order backlog is good, Mr. Rajneesh, but execution is a bit of an issue in terms of timelines, and that's causing a bit of worsening in your balance sheet as well. So working capital days have gone up, debt has increased. Should we expect more pressure on the balance sheet in the second half of the year?
No, we feel that, this pressure we should ease out because our working capital is little high because we have certain receivables which are yet to be realized. One big receivable is there. Other than that, we are already on track, and I think we are well on track as far as the balance business is concerned on working capital and receivables.
So can you give us some numbers then on the working capital days? Currently, I think it's at 122 days. How much do you plan to bring it down by? And on the debt, what's the amount now and how much do you think it would come down by over the next 12 to 18 months?
See, as far as number of days is concerned, definitely it will be lower. I can't exactly give you the number as on date. But if you look at the debt, in fact, we are in the process of raising further debt. That is mainly on account of, participating in projects like Namami Gange, where, we are going to treat it as a separate business since we have historically been an asset-light company. We have never invested. So we are in the process of, raising further debt. So in terms of debt, we may be raising further debt. But yes, definitely once our major receivables from one of the clients, if it is realized, the overall debt will definitely come down.
This is AP Genco. What are the chances of getting the money?
See, AP Genco, we have already finished all our work. It has two parts. One is in Telangana, the other part is in Andhra Pradesh. As far as Telangana is concerned, we were hopeful that we will be getting one major chunk of payment by September, which has been deferred by almost a quarter now. The reason being, early elections were announced, and this is something it needs approvals from the governments and various boards. So it has been deferred by a quarter. For the other part, which is in Andhra Pradesh, we are executing the job. We are well on track, and we'll be finishing by March to June 2019, and our regular payments have started flowing in.
No, the street is just worried about this provisioning for doubtful debt. It is the increase in that is a little worrying. Will you be able to reduce the amount of doubtful debt? And is AP Genco included in that?
Yeah, so our major, if you see, the provisioning, which has been very prudently done, is on account of AP Genco. I'm sure once we realize that, our provisioning will definitely come down.
Can you just give us the absolute number, sir? How much more debt will you be looking to raise and what is the debt level currently?
See, we are planning to raise around 300 crores additionally. We'll be using a very small portion of this, maybe around 20% for working capital. And the balance we'll be using for funded projects, boot projects or hybrid annuity projects like Namami Gange.
Okay. All right, we'll leave it at that. Out of time, sir. Thank you very much for joining us. We have to take a break. We will come back with the pre-opening rates. We will also have Deven Choksi to speak to us about a bunch of results. Back in a jiffy.